Hey everyone, Mike Clark here with Visionary Wealth Advisors, and now that the tax season's over, I thought it'd be a good idea to bring a CPA in to talk about the changes and just see how individuals can prepare for next year. So I have Brian Toennies with me. Brian's a CPA who has his main office in Sunset Hills. He's been in the industry for about 21 years on his own, has 14 employees, and really helps individuals and small businesses with tax planning and tax preparation. So thanks for coming, Brian. I appreciate it. Yeah. One question I have for you is regarding charitable giving. I know that I attended some conferences last year around charitable giving, and a lot of the charities were not necessarily concerned about the amount of charitable contributions they were going to receive last year. And the reason for that is various studies, and I'm sorry I can't quote the studies at this point, who asked individuals who had given in the past if they were going to be receiving deductions, as they always have, and most people, roughly 80%, said yes. And I think we found out that that wasn't the case. So really charities are concerned about giving this year, now that individuals filed their taxes and they witnessed that they were not able to itemize as they once were. What are some things that individuals might be able to do to combat that?
There's a couple tools that the taxpayer can use. The first one is for those who are over age 70 and a half, taking their required minimum distributions. They do a qualified charitable IRA distribution, which means their IRA can send the money directly to the charity, can't go to the taxpayer, then the charity. Distributions go directly to the charity. When that happens, the distribution isn't taxable. The contribution is also not deductible, but for a lot of people, if you don't have a mortgage, there's a good chance you're not itemizing your deductions anyway. So what you're able to do is lower your income by having the required minimum distribution go directly to the charity. You're maybe not missing out on a deduction because you don't have enough charity to itemize anyway. So in effect, you're able to shelter, $10,000 or $12,000 of your required IRA distributions from income.
For sure. So yeah, anyone who's 70 and a half and older, as you know, they have that required minimum distribution, and that's taxable income. They have to take it, even if they don't want to. So if they can make that check payable, as you stated, directly to a qualified charity, which is a 501c3, right? That it is a tax-free distribution. So, I always say it is effectively a deduction. I know it's not exactly the same thing.
But it's better because it's lowering your income on the front page of your tax.
For sure, because if you were to have that check payable to you, and then you go around on Sunday and you deposit it into the pail for your church, then you're not going to be itemizing if you can't have a collective deductions about $24,000 if you're married. Is that fair?
That's correct.
So I think a lot of times individuals think of charitable giving strategies as only for the wealthy, but I think that it's fair to say that there's a couple strategies, and we're going to talk about another one, that are for everyday people as well.
Even if you're giving $3,000 to $5,000, by keeping that out of paying taxes on it, you're saving, 1,000 or more. I mean, it's worthwhile for anybody. And we have clients that, that's exactly what they're doing. They're contributing, 1,000, 10,000, some even more. But the point is we connect with their CPA like you, and if we find out that they're not itemizing their taxes, or if they're barely itemizing their taxes, then it makes sense to, or it can make sense to use that qualified charitable distributions if they're 70 and a half and older. One thing I wanted to say is that Brian and myself do not know you, the individual watching this. So anything that's said today should not be considered advice, either from Brian or myself. We don't know the ins and outs of your situation. So we hope you enjoyed this video, and have a great day.